Hey, everybody, this is David Skrika, stock chart of the day. A few months ago, one of my most viewed videos was talking about India, saying this is the only investment you need to do, et cetera, et cetera. So we're going to look at the India fund, why I just bought some of it, did my first tranche of buying, and kind of my game plan for it. This is something I don't mind sharing with free subscribers because I think this is a very simple trade that almost anyone can do. So this is India fund going back to 2000 or 1999. And you can see the big drop during the dot-com bust, and then the huge move in the 2000s, and again, another crash during the financial crisis. And there's been some drawdowns in 2011, 2012, this and that. But overall, what it's done, it's gone from about 50 cents a share to $17. So at its low. So that's that's over 30x. It's about 3,000% return. So what this chart has done is actually included the distribution. So which that's interesting because you'll see a lot of the other charts of the India fund. You'll see, well, it's way below its 2007, 2008 high, but this fund is actually showing you like including the distributions as well. So we can see this here. And you can see like what you want to really try to do is try to buy on the downturns. And you can see there's been a couple the two big drawdowns were 2001 and 2009, but there were also drawdowns in 2011 and 2020, obviously, when everything crashed during COVID, and a smaller one in 2022. So, but here's the problem is how can you really time this? Like if the India fund is going to fall 50 to 70% every 10 to 15 years on average, obviously you want to wait for that, but it's not going to always do that. Like during even the COVID decline, you can see it went from about $12 a share to $7. It went down 40%. It actually went down less than the U.S. markets. Went down about 25% in 2022. So like, how can you you can't just sit around and wait for the extreme, but definitely once it starts falling. So my plan is this: the India fund now is about off 20%. Going from 21 to 17 is roughly 20%. $4, a little under 20%, but roughly 20% from its highs. So what I want to do is buy every time this thing falls 15, 20%, I want to buy another tranche. So hopefully if we see some kind of major decline in the markets, this will be one of the 2001 or 2009 buying opportunities in the India fund where you'll be able to buy it off 70%, like you'll be at $7 or something like that, but even if you don't, and maybe it just goes to 15 or 13 or something like that. And then you average in. If it goes to 13, probably my average price will end up being about 15. And if it goes to 7, my average price will probably be 9 to 10. And then hopefully longer term, you continue to make money. And like I said, this thing pays very large distribution. So we'll just quickly look at the Bombay Stock Exchange, or now it's, I guess, the Mumbai Exchange, but the Sensex, and you can see that this is, again, my friend Don Viallo's excellent website, Equity Clock. And you can see seasonally, India tends to correct in the first quarter of the year. And that kind of makes sense because India, that kind of wedding season and over what would be our Christmas. Obviously, Indians are mostly Hindu, so they don't celebrate Christmas. But that's the wedding season. That's when a lot of economic activity will happen during that. Then everybody kind of pulls back in the first quarter. And then really India just kind of goes up the rest of the year. So we kind of, if we look at this recent decline, we'll get a shorter term chart here, going back 1 year. If we look at this recent decline, you can see it happened a little later this year. It happened in April rather than the first quarter. But still by mid-April, it's 2 weeks late. It's not a big deal. We had essentially seen this decline, and then now we're moving higher. Now, part of this decline happened because what's going on in India is they just had an election, and the fear was during the election that India, that the Modi would lose. He ended up winning a smaller majority, so I think that was a bit of a relief. And India really hasn't bounced that much. So like I said, I didn't mind buying some here, but maybe that's a sign it's lagging. And I would love for it to go to October lows. This is one of those trades where I definitely don't mind short-term pain because it'll probably mean more long-term gain. And remember, when you dollar cost average, it's very simple. Let's say at $20, you bought, just for any argument's sake, let's say you bought $2,000, right? So you bought 100 shares, right? Just to make this easier. So you buy 100 shares or $2,000. Well, at $15, $2,000 will buy you 1,300 shares. So your dollar cost averaging actually gets closer to where you're buying. And then at $10, 2,000 shares would buy you for $2,000 to buy 2,000 shares. So then just do the quick math. If you bought those 3 tranches, all of a sudden then you own 4,300 shares, but half of them were bought at 10, right? So, you know, your average price, and then a third of them were bought at 15. Your average price at that moment is going to be, well, just do 4,300, and you would have put in $6,000. Anyhow, I'm not going to do all that sort of thing, right? So yeah, you buy 1,000 shares and 1,300, and then 2,000, and then your average price would come down a lot due to that. Sorry, 6,000. Yeah, your average price would be like 14. So even though you bought at 10, 20, 15, and 10, your average price is actually closer to the $10 mark because you can buy more shares as the stock falls. So that's really it in a nutshell. It's very simple. It's not some complicated thing. It's very simple math 101 type thing. So anyhow, so I just wanted to show you the India fund. It has had a decline here. It's kind of just sitting at the 200-day moving average, been bouncing off that since April. Has lagged on this rally, so maybe in the next tier lower, if we do get some kind of smash in the markets in the summer or fall, India, maybe this will fall more. And like I said, this is one of these things I'm hoping it falls more, because like I've made a lot of mistakes in my life, in my investment career, et cetera, et cetera. And one of the big mistakes I made, I did buy Tata Motors in 2009, was I should have, and I've been bullish on India. If you read all my books and all my writings for decades, I should have just been buying into India. And remember, with this fund having such big distributions, you could always just put those, we just rotate the distributions or half the distributions back into it, et cetera. And then there's, of course, individual Indian stocks you could buy, et cetera, et cetera. So a lot of those aren't cheap right now. Like, for example, Tata, which only trades in India now, is definitely not cheap. I wouldn't buy it here. But anyhow, there you go, India fund. I've bought my first tranche, and we'll see what happens going forward in it.